Which assets will depreciate the most in 2025? If I told you today that in 2025, 5 types of assets would depreciate sharply and lose significant value, what would your first reaction be? Most people would probably want to figure out which assets these are and check whether they own them. If not, they might think it doesn't concern them. And for those who don't own any assets, it might seem irrelevant, right? I can't help but smile at the thought that for each person, understanding whether an asset is likely to appreciate is often seen as more important than knowing it could lose value. Hello everyone, it's Your Name, and today I want to explore something that many people seem to overlook. I don't get why so many think that you can only make money when an asset's value goes up. Does that mean you can't profit when assets lose value? Let me give you an example. Imagine you know for sure that a house in a city, once worth $1 million, will be worth only $500,000 by 2025. You also know that the Vietnamese dong will likely lose value, while the US dollar will strengthen. What would you do? Would you just stand there doing nothing? Here's what you could do. Sell your house now, say for 25 billion Vietnamese dong, then exchange that for $1 million. When the dong loses half its value by 2025, your $1 million will now be worth 50 billion Vietnamese dong. Just like that, you've gained an extra 25 billion Vietnamese dong. House you sold earlier still holds the same value of 25 billion Vietnamese dong. You've essentially earned another property, all by taking advantage of the currency devaluation. You might think this sounds too far-fetched or impossible, but let me tell you a story. Back in 2011, many Japanese people migrated to the US. After a few years of renting homes there, they realized that the US wasn't the right place for them and decided to return to Japan. By 2025, they would find that the value of their assets had at least doubled. Why? Because when they moved, they exchanged their savings from Japanese yen to US dollars, and since the dollar has appreciated significantly against the yen, their assets have gained in value. This is a perfect example of how, whether asset values go up or down, there's always a way to profit. Think about Warren Buffett. He made the most money during the financial crisis. Li Ka-shing became the richest man in Asia when property prices in Hong Kong plunged, wiping out the wealth of many. Why does this happen? Well, increasing asset prices are like climbing a mountain. It takes time and effort to get to the top, but coming down, that can happen much faster. A good example is how the Dow Jones Index increased 49% during George W. Bush's presidency, but during the 2020 crash, it lost 49% in just 1 month. This means that if you were short selling during the crash, you could have earned as much in 1 month as it took 3 years to gain. Moreover, if you knew a property valued at $1 million would drop to $500,000, it would no longer matter if you couldn't afford it at its peak. You could buy it at a much lower price, and suddenly the opportunity becomes relevant to you. When you change your thinking and broaden your perspective, you'll realize that 2025 could present both good and bad news. But more importantly, it could offer plenty of opportunities to make money. This isn't about being blindly optimistic. It's about recognizing that when bad news strikes and asset prices drop significantly, that's often when the greatest opportunities arise. Remember, history has always shown us that those who adapt can take advantage of these changes. Whether you accept it or not, you will have to face it. The only choice you have is whether you want to be a general in this battle or just a casualty. So if you want to think this way and build your future, or if you hope to seize the opportunity and rise through the social ranks, then follow my channel. I believe I'll be able to share even more valuable insights with you. If you're worried about taking no action after watching this video, hit the like button. That way, it will automatically be saved in your playlist, and you can revisit it whenever you're ready. First, we need to open our third eye to truly see what will happen this year. It's simple. Follow my thought process, track the money flow, where it's coming from and where it's going. In other words, you need to understand the global game rules to predict what's next. So what is currency? Many people will say currency is money, but technically money is just tea. It's the medium. Currency, on the other hand, is a verb. I give goods, you give tea, and then you use that tea to buy something from me. This is a transaction that requires both goods and currency. If you hand me money that can't buy anything, it's useless. Think about the story of someone using 10,000 bitcoins to buy a pizza. Back then, Bitcoin was just a tea, not yet a currency. Currency only becomes money when it can be exchanged for what you need, and more people start wanting it. For example, the US dollar. All it takes is printing more of it, and the US can use it to buy goods all around the world. You see, China produces cheap goods, right? The US can buy those goods with dollars. In this process, China contributes labor, and the US just prints money. But why does China still want US dollars? Simple. Because dollars can buy them what they want, and it's not just China. The whole world wants dollars. The key thing is that the things the US can buy with its dollars are created from nothing, like US government bonds. Bonds are like lending the US money, and in return, the US uses it to make profits and shares a part of that with you. In other words, you're investing in the world's best money-making machine, the US. Where is the US dollar heading? And which assets will lose value in 2025? You can use the US dollar to buy diamonds in Africa, purchase electronics in Japan, and even in movies. We see characters using whole stacks of cash to buy drugs. This is exactly why the US keeps printing dollars without seeing their value collapse, because the dollar can still be exchanged for an ever-increasing number of goods. If you want to make a currency lose its value, there are two ways to do it. First, print too much money. Second, reduce the amount of goods that currency can buy, or make people stop wanting those goods altogether. Have you noticed that US government bonds, priced at $100, are now being sold for just slightly more than $90 in secondary markets, and they still offer a 5% interest rate? What does this mean? In the past, if you lent the US $100, I would only pay you a 2% interest rate, because if you didn't lend it to me, the whole world would still be willing to. But now, if you lend me $100, I will pay you 5% interest, and you don't even need to lend the full $100, just $93, and I'll still calculate the interest on $100. What does this indicate? Well, the first asset that will lose value in 2025 is US government bonds. Last year, when I told my clients about this, many didn't believe it, because the Federal Reserve was still raising interest rates. With US bond rates at 5%, many believed that when the Fed lowered interest rates, this 5% would disappear, so they rushed to buy bonds to lock in the current rate. As a result, bond prices increased slightly, but despite the Fed cutting rates, US bond yields didn't decrease. Why? Because US government bonds are becoming harder to sell. You'll notice that countries that were once major buyers of US bonds, like Japan, China, and the UK, have reduced their holdings. These countries no longer want to hold US bonds, they want to hold cash instead. This is a national policy, and national policies don't change overnight. So when no one wants to lend money to the US is forced to raise interest rates and decrease the price of bonds to attract buyers. You might wonder why these countries are reducing their US bond holdings. The reason is simple. When I buy US bonds, I'm essentially investing in the US. But the US is using that investment to support corporations, pay off old debts, and even borrow more money to pay those debts, or print more money to cover the costs. So, think about it. The price of US bonds is going to drop, but the interest rates will rise. This will cause many other assets, especially those yielding fixed income, to decrease in value. For example, if I buy US bonds, I earn 5% interest in just 3 months with no risk, and I only have to spend $93 to buy a $100 bond. So, why would I invest in assets offering only 3% or 4% returns? This situation leads to a drop in the value of income-generating assets like stocks. For example, if a stock is priced at $100 and pays a $3 dividend, 3% yield, But now bonds are offering 5% interest. For the stock to be as attractive as a bond, its dividend would have to rise to $5, meaning the stock price would need to fall from $100 to $60. So the $3 dividend would still represent a 5% yield. This means that assets that generate fixed income, like dividend-paying stocks, will decrease in value. Only when the price drops will the yield rise, which is the only way these assets will become attractive again, instead of bonds. Therefore, in 2025, another asset category that will lose value is dividend-paying stocks. Many people buy stocks for long-term passive income, but this year, these stocks could continue to drop in price while their yields increase. In addition, commercial real estate in the US will face a much worse situation than before. When the pandemic hit, people switched to remote work and consumer habits changed. Now, more people shop online, and you'll notice that office and retail spaces in the US are harder to rent out. As a result, commercial real estate prices in the US, both for sales and rentals, are declining sharply. This could set the stage for another financial crisis. The typical buyer of commercial real estate is large investors, not small retail transactions. Most commercial real estate owners have borrowed money from banks. But now, with no tenants or buyers, many of these property owners in the US can't repay their debts, leading to defaults on loans. As a result, these properties are being handed over to banks. At the same time, the largest asset held by these banks is US government bonds. So, when both commercial real estate and bonds depreciate, what happens to the banks? This is why Warren Buffett sold the US bank stocks he owned. But what I want to emphasize here is, do you know where the money is flowing right now? Pay attention to this detail. In the past, I would use US dollars to buy goods from China, and then China would use those dollars to buy US government bonds. In the end, the money would return to the US government. But now, with US government bonds no longer selling, this creates a problem. There's money, but no goods to exchange for it. This is just like the story I told earlier about using 10,000 bitcoins to buy a pizza. It's meaningless if you hold US dollars but can't buy anything with them. Therefore, the US needs to find another kind of asset to keep the dollar circulating. You'll see that the US continuously adjusts and releases job growth statistics to create the illusion that even though the global economy is weakening, the US remains strong. The reason is that they want to sell you a new kind of asset, US stocks. They're telling you, if you're worried about government bonds defaulting, don't worry. You can still invest in US stocks because the US economy is doing great and stock prices will rise. So the question is, where is the money really flowing? Where is the US dollar headed? Why it's losing value and what assets will be affected in 2025? In the past, the US sold bonds, and the money would ultimately flow back to the US government. But today, the US is selling stocks, and the money is flowing into the pockets of capitalists. Look at people like Warren Buffett, Mark Zuckerberg, and Bill Gates. All of them are selling stocks. Many people say Warren Buffett currently holds the largest cash reserves in history, but hardly anyone wonders how he's holding so much cash. The answer is simple. The money is flowing into his pockets. Otherwise, how would he have such a large cash reserve? The stock market's real role is to funnel the money of the many into the hands of a small group of the wealthy. The capital market doesn't create wealth. It just redistributes existing wealth. The US government is running a $2 trillion deficit every year, meaning its expenditures exceed its revenues by $2 trillion. This implies that the bulk of the money is flowing into the hands of capitalists, while the government is struggling to fund its own expenses. If Trump were to come back into power without enough funds to spend, what could he do? Could he use his personal money to save the country? Not likely. There are three possible solutions. The first is to increase income, but this is unlikely to yield significant results. The second option is to crash the stock market and direct the flow of money back into US government bonds. Right now, people are buying US stocks instead of bonds. But even if no one buys stocks, would they still buy bonds? The third and most direct method, which is most often used, is to print more money, and essentially borrow it to spend, i.e., expand the balance sheet. This would result in the US dollar losing value, which is the most likely scenario for 2025. All of Trump's policies require one key condition: the US dollar must depreciate to stimulate the economy. Recently, he even stated that if he regains power, he will permanently eliminate the US debt ceiling. This means the US could borrow as much as it wants without any limits. Isn't this just a stepping stone for expanding the balance sheet? If the government doesn't have enough funds, they can simply print more money and borrow to cover their expenses. As the money supply increases, the value of the dollar decreases. So the third asset that will lose value in 2025 is the US dollar itself. What else might Trump do? He could increase import tariffs. For instance, if China wants to sell the US goods worth $100, they might have to pay an additional $20 in import taxes. This will raise the selling price of Chinese goods to offset the tax. When that happens, most imported goods will become more expensive, and since the US depends heavily on imports, domestic prices will rise as well. At first glance, price increases might seem fair, because both the rich and the poor will pay more for goods. But is it really fair? Let's think about it. If you go out for a steak dinner and the price of your meal increases by $20, that's 20% of your daily income if you make $100 a day. However, if someone rich earns $1 million a day, $20 is insignificant. In 2025, ordinary people's purchasing power will drop because they'll be able to buy fewer goods, but the rich will hardly be affected. However, excessive inflation isn't good either. What do you think about the Russia-Ukraine war in 2025? War consumes a lot of money. Russia's income mostly comes from oil exports. If oil prices drop, Russia's income will be severely affected. So, oil exporting countries are currently declaring plans to extend their production cuts, meaning the supply of oil won't decrease any further. When Trump comes into power, he plans to boost shale oil production in the US. This means oil prices will drop, giving the US a competitive edge while reducing inflationary pressures. Additionally, this would cut off the financial resources of oil-rich countries, like Russia, weakening their negotiating power. What about cars? The final asset that will lose value is cars. The reality is that cars lose value the moment they leave the showroom. But after 2025, the depreciation rate will speed up, especially for cars priced under $100,000. China is currently the largest producer of electric vehicles, and Chinese electric vehicle manufacturers often sell at a loss to dominate the market. Tesla is also lowering its car prices. Many people bought Teslas a few years ago for $50,000 to $60,000, but now new Teslas are getting cheaper, with some models priced between $30,000 and $40,000. Those who bought Teslas a few years ago may find their cars are worth less than $30,000 or $40,000 now. This means their car's value has decreased by at least half. This trend isn't stopping anytime soon. Gas-powered cars are also losing value, as more people choose electric vehicles to save on fuel costs. Even prestigious brands like Porsche, which used to maintain their value, are losing their appeal now because they're not selling as well. As for US stocks, my viewpoint remains unchanged. Before the US expands its balance sheet, there will likely be a significant drop in stock prices. However, this process won't last long, just like in 2020, when it lasted about a month. After that, the US will quickly expand its balance sheet, print more money, and the money will flow back into the stock market, pushing stock prices back up. Currently, US stocks are consistently declining and adjusting, and our strategy remains flexible. We aim to make money through small wins rather than chasing large victories. The advantage of this flexible strategy is that we can exit whenever there's trouble in the market, preserving our cash reserves. When we make our move, we can quickly pull out before the opponent has a chance to react. It's like playing a game of Dookie, Journey to the West, not aiming for big wins, but consistently winning small battles to accumulate profits over time. One fatal mistake that most people make is buying stocks based on intuition without clear criteria or conditions. In a market with thousands of stocks, blindly following your gut isn't just time-consuming. It can lead to buying stocks that have no potential for profit, or worse, buying right before the price drops. That's why choosing the right stocks is crucial, and you need to follow a specific set of rules and systems. I sincerely hope that you find one or two useful insights from today's video that can improve your life and help you achieve financial freedom. If so, I'll consider this video a success.